Warren Buffett's top 5 holdings make up 76% of his entire portfolio, and while the top 5 holdings in my portfolio aren't weighted quite as much as Buffett's, they still take up a considerate amount of my total portfolio at around 54%. In this video, I'm going to be sharing with you the top 5 largest holdings in my personal dividend portfolio and why they are my top holdings. We need to keep in mind when looking at these holdings that the end goal of my portfolio is to one day be able to live off of dividend income. And while I think valuation for any company is extremely important, for a company to be one of the top holdings in your portfolio, you need to like a lot more about the company than just their current valuation. We want to look for things like competitive advantages, strong financials, potential for growth, and of course a history of increasing dividends over time. And we also want to see the company trading at a good value. And the largest position in my dividend portfolio is SCHD, the Schwab US Dividend Equity ETF. If we jump over to my do-it-yourself investor toolkit, which you can download on my Patreon page at the link in the description, you can see at the time of this video, SCHD makes up around 10.2% of my entire dividend portfolio, but it's actually getting ready to be closer to 25%. And that's because I'm actually getting to reallocate the capital from my Vanguard fund that I owned and also SPY into SCHD. These are also ETFs or index funds, and I bought them quite some time ago, but I believe SCHD will do a better job of helping me achieve my long-term goal of being able to live off of dividend income, which is the reason I'm getting ready to move these positions into SCHD. Again, it will be around 25% of my dividend portfolio. And if we jump over to my dividend dashboard, I'll go ahead and zoom in a little bit more over here. But if we scroll down, we can see SCHD is actually going to be paying me around $235 this year in dividend income, and that will continue to increase as I put more capital into the position. They continue to increase the amount they pay out in dividends, and I'm going to be reinvesting those dividends. But why is this going to be such a large position? And I'll go ahead and list off just a few of the reasons that I love SCHD and why I'm comfortable with it being 25% of my entire dividend portfolio. One of the first things I'd suggest you do when looking at an ETF is look right here at the expense ratio. And you can see the expense ratio for SCHD is sitting at only 0.06%, meaning that for every $10,000 you have in SCHD, your fees will only be $6, which is quite a bit lower than a lot of other actively managed ETFs such as QYLD or JEPI, which will really dig into your long-term returns. Now, since I am investing to one day be able to live off of dividend income, obviously we want to see a nice starting dividend yield and a good history of dividend growth. And the starting dividend yield for SCHD is currently sitting at 3.62%, so that's a really good sign right there. But let's go ahead and jump over and look at our dividend growth. If we come right here, we can see that the 5-year compounded annual growth rate for SCHD is sitting at 15.56%. So that's definitely 2 green check marks as far as their starting dividend yield goes and their dividend history. But we also want to see if it's properly diversified. So let's go ahead and jump over to our holdings. And you can see the holdings for SCHD has actually changed quite a bit within the last month, but it is still properly diversified, and I believe in this fund very much long term. Now, I want to point out one more thing. Obviously, this fund has performed extremely well over the past 10 years. You can see they're up about 126%. But if we jump over to the charting tab here on Seeking Alpha, let's go ahead and add a comparison. Let's compare it to the S&P 500 as we can see right here, and look at what happens during a bear market such as 2022. Let's say we want to take it from January 1st of 2022 to December of 2022. And what you'll notice here when I click apply is SCHD actually way outperformed the broader market during a bear market. And that is a really good hedge for your portfolio, as you can see right here. So not only does the fund provide great dividend income, really solid dividend growth, overall really good growth, but it outperforms the market during periods of bear markets. And that's one of the many reasons that I feel comfortable with SCHD making up 25% of my total dividend portfolio. The second largest holding in my dividend portfolio is none other than Microsoft. If we jump over to my do-it-yourself investor toolkit, you'll see that Microsoft makes up over 14% of my entire dividend portfolio, and the current value of that investment is a little over $9,300. So definitely a very large chunk of my portfolio is allocated to Microsoft, but I am comfortable with that for a few different reasons that I'll discuss in just a moment. Right here, you'll be able to see Microsoft I'm currently up around 9% on, and if we jump over to my dividend dashboard, one of the things you'll notice is Microsoft is projected to pay me around, let's see, $87.31 a year in dividend income, and obviously obviously that will increase over time as well. But let's just go ahead and jump over to Seeking Alpha and talk about Microsoft for just a moment. And why I love Microsoft is actually something I talked about on my Twitter account just the other day. So if you aren't following me over there, you can jump over there and give me a follow. I'll give you more updates. But I list just a few of the reasons that I love this company. And the number one reason that I listed them off is great free cash flow growth. If we jump over to my stock valuation spreadsheet and look at a discounted cash flow model, the first thing you'll notice is really good free cash flow growth and massive free cash flow generated every single year. Over the past few years, it's had an average growth rate of around 20%. And looking forward and looking at growth rate estimates, they're projected to increase their free cash flow at around 15% a year. So when you plug in all these other variables, you come to a discounted cash flow price per share of $315.05. So that is a great sign for the company. A lot of great growth prospects for them. If we jump back over to my Twitter, you can see the second reason that I love this company is their history of dividend growth. Let's go ahead and jump back over to Seeking Alpha and jump over to dividends. Click on dividend growth. You can see that their 10-year compounded annual dividend growth rate is currently sitting at 11.7%. To be able to increase dividends for that long of a period, for that high of a growth rate, is very impressive. If we look at the dividend history, you can see they've been increasing the amount they pay in dividends for 18 consecutive years. Now, anytime you have a really high dividend growth rate, there is something you want to check. The first is the payout ratio. So let's go ahead and jump over to dividends and click on dividend safety. You can see that the current dividend payout ratio for Microsoft is sitting at 28.89%. So plenty of room to continue to grow those dividends over time. And we also want to check something that we actually already looked at, and that's projected free cash flow growth. And in this scenario, obviously they have no problem in continuing to increase the amount they pay in dividends because of their high free cash flow growth rate. And if we jump back over to my Twitter one more time, you can see the last thing that I list is their competitive advantage. And I listed 5 reasons that I believe this company has a competitive advantage. The first is going to be their established customer base, the established brand, the strong financial position, the diverse product portfolio, and they are a leader in innovation. And we could go on and on about each of these, but I do want to talk about their diverse product portfolio for just a moment. If we jump over to another website that has all of their revenue streams listed from 2022, you'll see they have a lot of places that they are deriving their revenue from. And the 2 largest are going to be their server products and cloud services and their office products and cloud services. Combined in 2022, they generated over $100 billion in revenue from these 2 sources. And we could see Windows makes up over $25 billion almost. Gaming, they're quickly becoming one of the largest gaming companies in the world at $16 billion. And then they recently acquired LinkedIn in 2016. And let's see, they acquired it for around $26.2 billion, and LinkedIn is already generating $13.81 billion a year for them in revenue. They also have their search advertising, almost $12 billion, enterprise services, $7.4 billion, devices at almost $7 billion, and then other revenue streams make up $5.3 billion. So that is absolutely unbelievable. All those combined make me very comfortable with the fact that Microsoft makes up 14% of my dividend portfolio. The third largest holding in my dividend portfolio is a pretty popular company in the dividend community, and that is Realty Income Corporation, stock ticker O. Go ahead and jump over to my do-it-yourself investor toolkit like we have been, and you can see Realty Income makes up around 6.7% of my dividend portfolio, not nearly as high as SCHD or Microsoft, but still a considerable amount. And if we jump over to my dividend dashboard and we see how much it's been producing for me in dividend income, it's projected to make around $214 every single year in dividends. So let's go ahead and jump back over to Seeking Alpha. And again, unlike SCHD and Microsoft, you can see this company has a very high starting dividend yield of close to 5%. And if we jump over and look at the dividend growth, you're going to see quite a bit lower than SCHD and Microsoft, but for a real estate investment trust, a 10-year compounded annual dividend growth rate of 5% is really not that bad, especially when you consider the fact this is a company that has been increasing the amount they pay in dividends for 26 consecutive years. I think one of the good things about the current share price for this company is I think they're a little bit undervalued as well. If we jump over to my stock valuation spreadsheet, and this is a spreadsheet I actually designed for the sole purpose of valuing REITs. I'll plug in O and hit enter, and we'll quickly run through a few valuations. If we look at the AFFO multiples, historical price to FFO, and dividend discount model, and jump over to our output, you can see I came to an intrinsic value of $71.75 per share, a little bit higher than that current trading price of $62.57. Now, the fact this company has been increasing dividends for over 26 consecutive years and a really nice starting dividend yield of around 5% is enough reason for a lot of people to go ahead and invest into the company, but I do want to point out just a couple more things. If we jump over to their website, you can see they're known as the monthly dividend company. They pay out dividends every single month, and for their business model, they focus on investing into high quality real estate, which I think is so important. If we jump over and look at some of their top clients, you're going to notice that these are quality companies that Realty Income should have no concerns over whether or not they're able to pay their rent. You're going to see companies like Dollar General, Walgreens, Dollar Tree. We even have Walmart's, Kroger, and Home Depot. So obviously, like they said, they focused on investing into high quality real estate, which is one of the major reasons that I feel comfortable owning this company long term. The fourth largest holding in my dividend portfolio is another very popular company, and that is Coca-Cola, stock ticker KO. Jump over to my do-it-yourself investor toolkit. I'll blow this up once again, and you can see Coca-Cola makes up around 4% of my dividend portfolio. The reason this is actually one of my largest positions is because I've seen so much share price appreciation from the time I invested in this company. I'm up almost 30%. And again, if we jump over to my dividend dashboard, I'll zoom in just a little bit. And if we scroll over here, you can see I'm projected to make around $76 to $77 in dividend income from Coca-Cola this year alone. Now, there's a lot of reasons to love this company, but obviously, this is a company Warren Buffett invested into heavily in the late 1980s, and it's performed extremely well for him. And if we jump over to a website called Dataroma, we can see all the top holdings for Warren Buffett's Berkshire Hathaway, and we can see since that time, Coca-Cola is still one of the biggest positions. It's actually the fourth largest position in his portfolio. Well, it makes up around 8.51% of his dividend portfolio. The company has been increasing the amount they pay in dividends for a very long time, 60 consecutive years. It's one of the reasons they're so popular among dividend investors. If we look at the dividend growth, you can see it has slowed down quite a bit, but it's still decent at around 5.47% for a 10-year compounded annual growth rate. But this is one of the most reliable companies out there. They have a very strong brand recognition, a very strong global presence. They have a wide product portfolio, strong financials, and the ability to adapt to the market. And I think all of those reasons are good reasons to have this company in your dividend portfolio. Obviously, you want to buy in at a good price, which is apparently what I did since I'm up around 30%, but I think this company will continue to perform well in the long term. And the fifth largest position in my dividend portfolio is Lowe's, stock ticker LOW. Jumping over to my do-it-yourself investor toolkit, you'll see that Lowe's makes up around 3.9% of my dividend portfolio, and I've seen decent gains from the company. I'm currently up around 7%. Jumping over to my dividend dashboard, you'll see that I'm expected to generate around $54.60 in dividend income this year alone from this position. Jumping over to Seeking Alpha, there's a couple of things that I want to point out. Again, if we look at that dividend history, we can see this company's been increasing dividends for almost 60 consecutive years. Jumping back over to our dividend tab, if we scroll down here, we can see they do have a low starting dividend yield at about 2.12%, but they also have a nice low payout ratio at 28.77%, and also really good projected free cash flow growth, as we can see right here from our discounted cash flow analysis. It also gives us a valuation of $257.21, which is something I'll talk about in just a moment. But jumping back over here, if we look at the dividend growth, this is where things get really impressive. We can see they have a 10-year and 5-year dividend compounded annual growth rate of over 20%. That is absolutely phenomenal. So this company has seen some major dividend growth within the past decade, and if it continues to do that, this will probably be one of the best performing investments in my dividend portfolio. Now, one of the reasons this is the fifth largest position in my portfolio is because of the valuation. And like I mentioned just a moment ago, we came to a really strong discounted cash flow analysis, and I think we'll continue to see Lowe's jump up higher and higher in share price over time because of its strong financial position. The company has a lot of growth potential, and it also has increasing demand. If we jump back over to Seeking Alpha, let's look at the income statement. You can see the revenue from 2014 to 2019, pretty decent growth, but from 2020 to 2023, it has absolutely exploded due to the increase in do-it-yourself projects and more time being spent at home. And I think this company also has some competitive advantage as well. Obviously, they do have to compete with Home Depot, but overall, I do like Lowe's a whole lot. So there you go. Those are the 5 largest holdings in my dividend portfolio. If you'd like to be able to download this spreadsheet, you can head over to my Patreon page at the link in the description. Seeking Alpha is also still running a 58% off sale at my link in the description. So if you're interested in Seeking Alpha, be sure to to check that out as well. But with that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.